And we're live. Hello,
Yes.
hello. It is Tuesday night with the People's Pride Project, and you know what that means. That means we are having couch conversations. Somewhere between talking to your cousin Pookie on the couch and the professor. We like to keep it real easy, keep it real casual. So, this week we have Mr. X of Mr. X Stock Market Academy. Now, I told y'all, October we're kicking off this whole wealth series. And today, our first guest is doing just that. We're going to show how to jump in and get your toes dipped into the little stock market. So, Mr. X, how you doing?
I'm doing great. How are you?
I'm doing well. I'm doing well. Thank you for joining us here.
Yes, thank you for the invitation. I'm glad to speak with you and your audience this evening.
Good, good. So, I'd like to start with obviously, you have experience with the stock market. How did you get involved in that? Is that, something you went to school for? Or did you just wake up one day and say, "Hey, I want to be part of this"? Like, how did that start for you?
Yes, yes. So I didn't necessarily go to like formal schooling, college, and learn about the stock market. I really got introduced to the stock market from a number of different jobs that I've held, over my working career, and typically most jobs, have some type of retirement plan.
Mm-hmm.
In particular, I worked morely in private industry, so they would typically have like a 401k retirement plan at the job, and that's typically how I got introduced to the stock market, and basically started funding my retirement. But as time went on, and I started to basically have a higher interest in learning more, about the stock market. I um, I read a number of different books, um, webinars I viewed, and I actually came in contact with two individuals that actually became very wealthy from investing in the stock market, and they took me underneath their wing, and they taught me.
Mm-hmm.
So once I learned that information, the way that I learned it, and I kind of decided to combine it with my professional training, which is in business marketing and entrepreneurship, and working with small and medium sized businesses, helping them to like launch, develop, grow, achieve their sales objectives, revenue goals, and getting my master's in business administration, which is in innovation, entrepreneurship, and marketing. I just put that together because I understand the principles of what it takes for a business to be successful. And those same principles apply to companies that are in the stock market. So
Mm-hmm.
I really got really motivated to learn a little bit more about the market, but then also to form this company, because I realized this information wasn't being taught in the traditional school system.
Mm-hmm.
Yeah.
Now, the way you speak about it not being taught in traditional school system, I think that's twofold, especially when you're dealing with communities of color. With the what's the word? We'll say advancements in things like, say, Acorn or Robin Hood, or things that make getting into the stock market feel less like gatekeeper ish.
Right.
Do you feel like, for the longest time, the stock market really wasn't for us? We like stuck money under a mattress or something like that and thought it was going to happen. So, do you think those are viable options and you get the same sort of return or the same sort of experience by going those routes, now that those are things, we all have them on our phones?
Right, 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 right. Well, they could be a good starting point for someone, especially if you don't have a lot of money, because I know that's one of the things that they cater to, like, invest your spare change,
Mm-hmm.
so they basically have let people know that You don't have to be necessarily wealthy, to invest or have a lot of money. It could be a good starting point, for someone. But if you really want to like really learn how to invest, you really have to take it a step further,
Mm-hmm.
because it's almost like you're investing in something. But basically these are platforms that is allowing you to invest, right? And they have
Mm-hmm.
different investment vehicles that you can choose. But if you really don't understand the principles, of investing, then
Mm-hmm.
you know even though someone may say that you're investing, you're kind of more like speculating.
Okay.
Yeah, you're kind of speculating, and it's like, and what I mean by that is, like, for example, yesterday, for anyone who follows the market, yesterday was a very rough day in the stock market. It was, a lot of companies were being sold off. A lot of red. That basically means not a good day. Just like when you drive your car, you see red, stop.
Mm-hmm.
You see green, go. So in the stock market, you see red. That means stocks are being sold off, or people are taking money from one particular company and maybe putting it in another company. So you had yesterday was not a good day. Now, if you were someone who's actually trained to be an investor, you'd
Mm-hmm.
be able to know why yesterday happened, and you'd be able to put it into a proper context. You wouldn't be like, oh my god, the stock market is selling off today, I'm losing my money, I'm going crazy, I need to call my my brokerage company, or I need
Mm-hmm.
to open up the app and I need to sell out, I'm losing all my money. You get what I mean?
Mm-hmm.
So that's where the knowledge comes to actually know how to invest in particular companies, or you know sectors of the economy, and also knowing about other things that actually are affecting the stock market, because there are other external factors that are affecting the market. So within my academy, we give you the foundation of how to invest, teach you about other external factors that's also affecting the market, such as like the interest rates. Typically when interest rates are low, businesses can borrow money at lower rates, so they like that. So in terms of the stock market, when the interest rates are much higher, companies can't really borrow money at the rate that they want to borrow at. So, the lower the rates, typically it allows the stock market, to expand, or companies to expand. The higher the rates, they kind of, contract a little bit. And then now, even right now in the United States, we're going through the coronavirus still, right? So you have a lot of uncertainty, going on in the market in terms of the economy reopening. And then last week in China, there's a company, I think it's called Evergrande. They're a real estate developer,
Mm-hmm.
and they have to pay back their debt, money that they borrowed to build these various real estate projects. And there's so many different variables that's involved with them building these projects, right? You have construction companies, you have architects, you have supplies, lumbers, all these different things. So even something happening in another country, China, affected our U.S. stock market here, last week. But you wouldn't know that unless you're somebody who is studying, like, or being aware of global affairs, global business transactions. You just see, oh, the stock market, is going down. And then even the government right now, right? When is it? They're debating back and forth to increase the debt ceiling. So that is even having an effect on the stock market. Then Joe Biden is considering whether or not he can get his infrastructure deal passed, so we can get, roads and bridges and different projects, fixed here in America. So there's a big debate. So if that bill actually gets signed, the stock market is going to react to that. If it doesn't get signed, the stock market is going to react to that. So there's a lot of different things in terms of understanding the stock market, other than the companies that you want to invest in.
Hmm.
I know that's a little handful, but I just try to, you know, break it down, you know, in layman's term as much as I could. And that's one of the things I do within the academy. You know, that's why the same principles that somebody would utilize to invest in a company in the stock market is the same principles that they would utilize to invest in a brick and mortar business that they may see in their neighborhood, right? Yeah, that so and that's how it's no different. It's no different. So if let's say somebody in your family, right, they want to open up any kind of business,
Hmm.
whatever it is in your community, they want to open up a supermarket, they want to open up a laundromat, they want to open up um, a hair salon, whatever they want to open up. The same principles that I utilize to evaluate a company that is already up and running in the stock market is the same principles that I'm going to utilize in terms of evaluating that business opportunity that my family member or friend brings to me, or even if the business is already open or open already, but they want to, let's say, open a second location. They come to me, they know that, you know, that I invest in private businesses, and they're going to come the same principles that I utilize. So that's the simplicity of it. But it's not really taught to you like that, you know, from, let's say, you know, the experts, you know, the financial advisors
Hmm.
that we seek out, um, you know, to decide which companies we should invest in. But it's the same principles.
So, if I'm a regular person, say I work at Walmart, and I keep hearing, oh, it's the big conversation, generational wealth. We all have to have generational wealth now, right? That's the
Yes.
buzzword, right? We don't want to be poor no more.
Yeah.
So,
I like
so
that.
how do I, as person, basic person, not a lot of stock knowledge, not really have I don't really have my ear to, like you were saying, all the different particular events that are happening, but I
Right,
have a little bit of money, that I can start something with.
right.
Where would I start? Is it best to jump into, say, a Robin Hood or something and just play around, or where do I start?
That's a very interesting question. I could answer that question two ways. I could say like where someone could start,
Hmm.
but then I could also say maybe what you should do before you start.
Okay.
And yes, yes, you know, anybody could say, well, you know, go do this and go do that, go do this. But then by me saying that or someone saying that to you, you're kind of reliant on what that person is telling you. Um, Another thing I could say is go and get educated by someone who has achieved a level of success investing in the stock market. You know, someone who's made hundreds of dollars, thousands of dollars in the stock market. Get that education first, because once you have that education, you won't necessarily be so reliant on reaching out to that person again. Not to say you would never reach out to that person, but you won't be so reliant on that person on being able to evaluate what type of investments, you know, in the stock market is best for you, you know. So the education is actually really, 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 uh, you know, key, because everybody's situation is totally different. And let me give you an example of what I'm talking about. Let's say hypothetically somebody is 20 years old and they say that they want to retire when they're 60 years old, and they put together a plan, either, you know, with themselves or with someone else, and every single month for 40 years they invest money into some vehicle in the stock market, and they consistently do it. They don't miss 1 month. So it's quite possible that that person would be able to achieve the amount of money that they're looking to achieve over that 40-year period. But someone else, let's say, who's maybe 30, 35, maybe 40, right? Maybe 45, right? Let's say they had some involvement with the stock market, whether it was through their 401k retirement plan from their job, or maybe a 403b if they worked at a nonprofit, but and they had their money invested, but they didn't invest consistently. It was kind of haphazardly, sporadic. Maybe one month they invested, next month they didn't invest. Maybe a couple months went by, they didn't invest, and then they started again. It just kind of all over the place, right? And they want to retire, let's say, at 60 years old. Well, based on what they've done so far, they probably cannot follow the same strategy that 20-year-old was following, because they are behind in their retirement. And there's certain things that they would have to do on top of these investments that they currently may have in order to catch up, so they would be able to retire at 60 years old. Mm-hmm. So the one size approach in terms of how you invest in the market is not going to work for them. I label it like a cookie cutter approach. It's not going to work for them because they're behind significantly, and they realize that they're behind. So they have to employ some strategies to help them to catch up faster. Right. And inside of my academy, we teach you that. But to go back to your original, question, someone working at Walmart, have a little money and stuff. Well, there's many different brokerage companies that somebody could open up, a brokerage account with. Most of them, are open 24 hours a day, because, the world is digitized now. But, you like to look for a company that maybe has really good customer service. Some of them have customer service 24 hours a day, 7 days a week. Many of them have a lot of data that you can utilize to evaluate the companies that you want to, invest in. A lot of different charts that you can look at where you can compare, let's say, a company's sales year over year, like the sales that they achieved, let's say, in 2020, and compare it to 2019 to 2018, and so forth, and so on. But one of the things that's really, really important in terms of any investment that you choose, in the stock market is that, what are your goals? That's really, really key, right? What are your goals? Are you investing to, let's say, provide money for your child to go to college or to go to some trade school? Are you investing to just grow your money so it stays ahead of, inflation? Are you investing because maybe you're trying to pay off the mortgage on your home faster? Are you investing to pay off, let's say, maybe your student loan, if you have any, faster, or credit card debt? Are you investing for retirement? What are you investing for? What is the amount of money that you need to achieve in that investment where you could say, okay, I got that money, now I can pay off that debt, or pay this, or pay this, or pay this, and then and I'm good, So there's a lot of things to think about, because otherwise, if you don't have some goals attached to your investments, you're kind of investing kind of sporadically, like all over the place. But you could have a brokerage account and have multiple investments like the ones I just mentioned to you, and you could be investing in more than one of them at the same time to help you to achieve whatever goal you're trying to achieve. Some people invest in mutual funds, which is basically like a diversified portfolio of so let's say stocks and bonds that are typically a investment firm would manage that money for you, and you pay them a fee out of that. Some people invest in index funds, which basically track a particular segment, of the market. For example, the S&P 500, which stands for Standard & Poor's, they track the top 500 stocks in the United States. So there's an index for that. You have the Dow Jones Industrial Average, which are the top 30 companies in the United States. There's an index for that. You have NASDAQ, which typically tracks the technology companies, here in the United States. There's an index, for that. You have ETFs, which stands for exchange traded funds. And
Mhm.
these are like funds that track a particular sector. So just think about like when you go into the supermarket, right? You know, you have the aisle that has all the vegetables. Let's say vegetables are, um, let's say, synonymous for stocks, right? Different vegetables. You got,
Mhm.
you got cucumbers, you got lettuce, you got tomato, you got all different type of stuff, right? And you don't know which vegetable to invest in. So what an ETF will do is you could invest in all of the vegetables in that one aisle. You know, so so let's say whatever the ETF, how many different companies that make up that ETF, and you'll just invest a certain amount of money every single month into all of those, let's say, vegetable stocks. I'm just using it as an example,
Mhm.
or technology stocks, or cannabis stock. You don't know which cannabis stocks to invest in. You're big into cannabis. You think cannabis will be a big thing, so you invest in a portfolio of cannabis. Stocks. So, and then you have what? Then you have individual stocks, right? You can invest in individual companies, which takes another level of education, But what I will say is for someone that wants to kind of, get in the game, uh, get their money working for them, a diversified, portfolio,
Mhm.
whether it's like an ETF, an index fund, even though a mutual fund, they charge you, some fees for on that, is a way for you to kind of just get into the stock market game and get your money working for you. But depending on the returns, how much money you want to earn based on the investments that you put your money into, that would determine where you would put your money. For example, the S&P 500, the top 500 U.S. stocks over the last 90 years, they average anywhere for a return of anywhere between, let's say, 8 to 10% on your money. Some years it may earn significantly more than 8 to 10%, but on average, it's about 8 to 10%. If you were somebody that wanted to earn significantly more than 8 to 10%, even though that's not so bad, but let's say you needed more, or you wanted more, well, then that particular investment may not be suitable for you. You follow me? So there's a lot
Mhm.
of things to consider in terms of, you know, where you want to invest your money. If that's fine for you, then by all means, you can start off with you can start off with that, and people invest in, let's say, an index fund for retirement purposes. They invest in it just to grow their money. They can invest in it to put money aside for their child. Um, so it all depends. But like I said, if you really just want to get into the game, one of the nice things about the stock market that I like is that nowadays with these different apps and different platforms, it makes it a little bit more accessible, to the
Mhm.
to the to the to the masses, and you have investments that you can get involved in where you don't have to start with a lot of money, and it gives you an opportunity to uh, to build your wealth, for yourself or your family. So it kind of maybe democratize it, as someone may say, um, but you could do that.
Do you feel like, well, before I ask my question, so what I'm hearing, number one, don't just jump in with both feet and see what the hell happens. Like that's not the smartest way to go. Uh,
Right.
and number two, if you are gonna start and say you don't have a lot of knowledge, maybe start with a cluster investment versus trying to pick individual stocks until you figure out what you need to know.
Right. Yeah, that could be a good,
Like a
start.
baseline start point.
Yeah, baseline start, especially if you're young,
Hmm.
a younger person. That could be an ideal way to go about it. But then the other piece is, what are you investing what are you trying to achieve, from your investment?
Hmm.
That's a key thing, because like the example that I just gave to you, with that 30 or 35 or 40, 45-year-old person that was investing, but they were maybe not investing consistently, or it was sporadic, you know, um, and they were behind. There may be additional types of investment strategies they have to employ to put themselves in a position to catch up. And the only way for them to really be able to do that the right way is really to go out there and uh, acquire the knowledge, because anybody can tell you do this or do that. And that's why I gave you the example of yesterday in the market. It was a very, very bad day. Now, if you were someone who didn't have knowledge of the market, it may get you scared and may make you want to sell off your investment or run away. But then you look at the market today, it rebounded a little bit, but someone who has the knowledge, the experience, the insight, they know that this is a part of, for lack of a better way of saying it, a part of the game, the ups and the downs, but you have to be able to know that, you have to be able to stomach that, as well.
Um, we're in the social media age, obviously,
Yeah.
and it seems like we're in this forward momentum where everybody's a stock market guru. Everybody's got a program. Everybody is like, yeah, it's easy. You just do this. But the entrance fee to the knowledge is still another form of gatekeeping. Like, if I only have an extra $100 out of my check, $50 out of my check to pay for, and your course is $1,500, how am I supposed to figure out? Or I end up back at the beginning with like Robin Hood and Acorn just dumping money and stuff, seeing what happens.
Right, right, right. Well, you do have some very expensive programs out here, and I can't really say per se, why one particular program may be more than others. Could be, the person really feels that they're worth what they're selling
Mhm.
or what they've achieved, their background, their knowledge, their accolades allows them to charge the price they want to charge. I would say, look for companies, or that are more within your budget, to help you with getting the knowledge. I mean, one of the things that really motivated me to start this particular academy was, once I learned this information the way that I learned it, even on the most basic level, like you asked me the question a
Mhm.
couple minutes ago,
Mhm.
someone just investing on a basic level, even small sums of money, how that small sums of money over a longer period of time, could be now worth thousands of dollars, and you didn't even have to be an expert. This is just
Mhm.
it's just like it was just a consistent, pattern of of behavior.
Mhm.
Yeah, consistent pattern, of behavior. Um, if within my academy, in one of my paid courses, I show my students how, let's say if somebody had a newborn child, right?
Mhm.
And they decided to start a basic investment for them. And then by the time the child got to 18 years old, they told the child and showed them exactly what they were doing. And they said, I want you to take this investment over. I don't want you to sell anything out of it. And I just want you to continue to add the same amount of money that I've added to this investment since you were, first born. If the child actually did that and continued that, by the time the child turned, let's say, 45 years old, the child could have an account worth at least $1 million.
Mhm.
How many people can actually say at 45 years old that they have an account that's worth $1 million? It's unheard of. But this is the power of investing. Interest, compound interest, basically, earning interest on interest. And this is where the knowledge, comes into play. And I'm pretty sure that if most people, let's say here in America, because this is where we live, right? Had that basic knowledge,
Mm-hmm.
And they would have actually done what is it that I'm teaching my student, because it's like a no-brainer, but they didn't teach this information in formalized school. They didn't teach it, so with the I guess you would say the advent of the internet and other information just coming out, as technology continues to expand and we start to know different things, we have our hands on this information, here, and that's just even on the basic level. But going back to the reason why I founded the academy, I really wanted to empower people to learn how to invest on their own, because one of the things I recognized was that unfortunately this information not being taught in the school system, and even if you may learn this, let's say on the college level, if you happen to be someone, to take an investment class in college, in most cases, it's more theoretical. It's not somebody who actually is the teacher is not somebody who's actually standing up in front of you and actually talking to you about their experiences in the market as being an investor, as I do with my academy. So I'm talking from things that I'm actually doing. I'm showing my results, and it's real life experience. This is where it's coming from. I'm putting up my own money for real returns and potential losses, and I'm showing you a systematic way on how I go about in investing. And then I realized that this investing is not really that complicated. It's really not that complicated, and that's why I said the same way how you would decide to, let's say, invest in your family's business if they have a business and they want you to invest, whether it's a startup company or it's an existing business, the same principles that I utilize to evaluate a public company is the same principles I'm going to utilize to evaluate a privately owned company in the neighborhood. And then I wanted people to not to learn how to do this on their own, because I didn't want people to feel like they have to be so reliant, on these financial advisors, financial planners. Nothing wrong with working with them, just to say, but if you have the knowledge of how to invest properly in the stock market, how to evaluate companies, how to understand external factors that are affecting the market, and you decide you want to work with a financial advisor or financial planner, you will have a much more intelligent conversation with that person, because you have the foundation of knowing how to invest. And if they are recommending specific things for you to do or to invest in, you will be able to push back based on your age, the goals that you're trying to achieve with that particular investment, to say to that person, that strategy that you're giving to me is not going to work for me based on these things that I know. And then you can listen and see what their response is going to be, as opposed to just taking their advice, doing whatever they tell you to do, and then maybe let's say if it's an investment for retirement, you wait, 20 years from now, then you come to find out later on down the road that it didn't work out for you. What do you do then?
Right.
Yeah, what do you do then? So it's really about empowering people to like learn how to fish. I'm teaching you how to fish. I'm teaching you how to cook a meal, on your stove, because once you learn how to cook, you will always be able to eat. You don't have to rely on, calling for takeout. You don't have to be looking in your refrigerator talking about, there's no food in here, when you can see that there's food, because you saying there's no food because you don't know how to cook.
Right. Right.
You know what I mean? But if you know how to cook, you open the refrigerator. Oh, there's plenty of stuff in here. I just take this out, mix this up, and then I'll do this. So, and not only that, there's pros and or advantages and disadvantages with every investment in the market. With index funds, mutual funds, individual retirement accounts, Roth IRAs, even individual stocks. Do you know the risk of these investments? Do you know the advantages? This all comes from knowledge, right? And most of the times when you're talking to a financial advisor, they're not talking to you and telling you the risk or the pros or the cons or advantages, disadvantages of the different investments that they're speaking to you about. They just telling you do this, do this, do this, and do that. In my academy, I'm teaching you, I'm educating you about all of this. So you're going the information that you're going to learn from us is very empowering. And a beautiful thing about it is that once you learn it, you'll be able to teach your children, your grandchildren, anybody that you want to teach it to, so that they could advance their life. So it's really about helping people, empowering people, and helping communities to advance.
That's the major reason it was actually important, or at least I felt it was important to have you here because number one, with the People's Pride Project, I want to make sure that people can start where they are and not feel like they're limited, not feel like there's all these extra parameters and hoops that they have to jump through. Because really, we're the first generation where this sort of knowledge is widely available. This is the first generation where we've had somewhat expendable income to really put in avenues like this. So it's important that we do have a starting place. Like I said, even if you're the cashier at Walmart and you want to do something more, there's still a place for you. There's still a way for you to, get in where you fit in.
That's what I
And
say. That's exactly what I say. I apply that to stock, not to interrupt. Stock market investing, even real estate. Even starting a business. As I mentioned, I have a background helping people to launch, grow, and develop businesses. And a lot of times, somebody would be speaking to me about things, and some businesses, they're very capital intensive. You need a lot of money to get involved in those businesses. And nowadays with technology and different things, not to say that you shouldn't go and pursue those things. I'm not saying that, but depending on what you're trying to achieve, you know, I would probably put my efforts into something that I could get up and running much faster on the business end. That could make me some consistent capital than spend let's say months and months trying to raise capital for this big humongous project that needs to be funded. It all depends on what you're trying to do. And a lot of times people are in very, let's say, dire situations, and they're trying to pursue something that's very, way out there, and, if you're not in that type of situation, then I'm like, it's a different conversation. It's like investing. I relate that this to investing. If you have limited capital, right? Why would you pursue investments that are extremely risky, right? Because you have limited capital. The objective is to not lose money, is to preserve your capital, as an investor, right? If you're
Mhm.
someone who's extremely wealthy, you could afford to invest in high risk companies or projects, businesses, etc. Because if you lose money, it doesn't affect your daily living. It doesn't mean anything to you. But someone who's trying to build up, starting with a very limited resources, that's not a strategy that I would employ if I was in that situation. You know, so that's one of the principles that we teach. Within the Mr. X stock market academy. So one of the nice things about the academy is that we have something for everyone. We have a paid webinar called Stock Market Investing Fundamentals, and this is a webinar that we teach for people that have absolutely no experience, in the stock market. So it'll teach you about all the different indexes, like the ones I just mentioned: S&P 500, Dow Jones, Nasdaq. It'll talk about the different types of stocks. It'll talk about how to read an income statement, a cash flow statement, a balance sheet, why you should be investing, external factors that affect the market. So this is good for, like I said, beginners, could be adults, but even parents that are listening to this. I would say this will really be good for your teenagers, Okay. We send our children to basketball camp, football camp, baseball camp, swimming camp, dance, music, all those things, karate. Those things are good. They help to develop a child in different ways, physically, athletically, confidence, things of that nature. But why don't we consider sending our children to financial camp or
Mm.
money camp? Because there's going to be a point in their life when they're going to have to leave your home and have to be able to provide a living for themselves. Okay, because we live in a capitalistic society, and why not give them a head start to learn how to make their money work for them instead of them only having one concept of money, meaning getting a job. There's nothing wrong with getting a job, but you should also learn how to diversify your money and not have your money coming from one area, because if that one area gets affected in a negative way, well then, and you don't have any other source of income or resources that you could rely on, well then you're not going to be in a very you know pretty situation. So I encourage parents to have their children sign up for that stock market investing fundamentals webinar. And then we have a webinar titled How Wealthy People Build Wealth in the Stock Market, where I talk about their outlook, their philosophies, their principles. I also talk about the three pillars of wealth. Even though we are a stock market academy, I add a lot of additional information in the webinars. So, for example, the three pillars of wealth, in my opinion, are stock market investing, real estate investing, and starting a business. So I speak about that. I talk about money skills that we all should know in that particular webinar. And then the last paid webinar I have is titled How to Build Wealth in the Stock Market. And in that webinar, I talk about how to build wealth through buying individual stocks. And then I go back and talk about the advantages and the disadvantages of, other investments like the ones I just mentioned before, the mutual funds, index funds, target date funds, different IRAs. I talk about um, the benefits of investing in the market long term. You know, I talk about how to prepare for a stock market crash when buying individual stocks, and also when you have a retirement account, such as like an IRA and 401k, 403b. And, I talk about a number of different things as well. And in each of these three paid webinars, we give our students a lifetime email support. So if they have any questions about those three paid webinars, we will answer those questions. If they have any questions about what's going on in the stock market on a daily basis, we will answer those questions. So we're really here to support them through. It's not like you just coming, learning some information, and then going on your own and trying to figure this out. No, we're here to support you, through and through. And I also give the students that sign up for any of those free paid webinars a list of my stock picks. These are stocks that I've researched. They have to do the research as well if they decide they want to invest in those companies, but we give them that as well. And then I have a free webinar that's titled How to Build Wealth in the Stock Market. Okay, and then in that webinar, I focus on individual stocks as well. And I talk about opening a brokerage account for those that are new, how to grow, how to enhance your existing brokerage account if you're already investing, knowing your investment goals. I show an investment that I grew by 45% in less than 1 year. And that next free webinar is this Thursday, October 7th at 8:30 p.m. Eastern Standard Time. They can just go to my website, Mr. X, stockmarketacademy.com, and then look for the registration section there. You just need a free Zoom account to sign up, and I guarantee you will learn something that day. For those that are listening, I put the information in the chat.
Mm-hmm. And you can see the link, or rather the website, is on the screen, so y'all can copy that down, write it down, put it in, store it how you need to. But the information is out there, the information is available, and it really is information that we need. I mean, honestly, my elementary school, we had a stock market club.
Oh, good.
That doesn't mean I know anything. I mean, I remember vaguely. I remember stuff from some of the economics classes in college, but to really be like, I'm a hardcore investor, I throw money at stuff because in my
Yeah.
head it makes sense, but that doesn't necessarily mean it's going to make me any money.
Right.
And then you have all of this, like, I'm telling you, back to social media. It's like social media is governing everybody's lives and their life decisions right now. But like the whole Dogecoin thing and
Right.
crypto, and they make it, well, tomorrow you're going to be worth $50 billion if you put. It's like, how there's a lot of information and misinformation out there for people to sift through. And it's
Right.
really hard to find something that's accessible, affordable, and relatable to dig through all of the nonsense or all of the noise and learn what needs to be learned. So I truly appreciate what you're offering and what you're doing, because a lot of us need it. A lot of we need it.
Yes. Yeah. Definitely. Definitely. Learning how to diversify your money and making your money work for you is a critical skill,
Hmm.
especially in these times. We have to learn how to do these things. And that's why I said, in my opinion, the three pillars of wealth are stock market investing, real estate investing, and owning a business. I mean, if you look at any person that is wealthy throughout the world, I can almost guarantee you they're involved in all three of those things that I just mentioned, or at least one of those things that I mentioned, or two of those things. And you can tell me anybody right now, and I even if you say, well, this person owns land and there's nothing on the land, that's still real estate. You
Hmm.
get what I mean? You know what I mean? It's undeveloped land is just sitting there, and he or she owns it. There's not. They're just waiting to decide what they're going to do with it. That is still real estate. And what could be built on real estate? Civilization. you know. So they still have it in their in their portfolio. And one of the things that's really so good about the stock market is that, as we kind of mentioned before, is that it's one of few investments that you can get into with very small sums of money. Depending on the business that you want to launch, if that's what you want to do, there are businesses you can get into with a little bit of money. Then there's some, a little bit more, whatever. But I mean, if you got $5 a day, which is $150 a month, right? Just 30 days in a month, you can get into the stock market. Name me a business that you could start for $150. I mean, your registration for your LLC is more than that, and you haven't even launched a business. You know what I mean? I
Hmm.
mean, like even probably the least expensive, let's say, I don't know, maybe you find a network marketing company if you're into that type of stuff that you can get into. You know, possibly if it's non-product related, you know what I mean. But if it's product
Hmm.
related, maybe maybe you need $300, maybe four, maybe five. Like I said, $150, $5 a day. You can get into owning um, companies that are worth billions of dollars. And you don't have to manage these companies. You're not running the companies. You're not the CEO. You're not the chief executive officer. You're not marketing the company. You're not collecting money. You're not dealing with customer service issues. All you're doing is aligning yourself to a company that has high demand for its products or services. And when their value goes up, your investment goes up. It's that simple. So it's almost a no-brainer in terms of, like, why wouldn't you be doing that? Or why, if or why would, even if you have your own business and you're making a lot of money, any, say it again.
Why not make more?
Well,
Um,
it's not. Yeah, well, why not make more? But then also, um, you don't want to have all your money tied up in one area, right?
that's true.
Right. And the coronavirus showed that, right? Unfortunately, in particular, I mean, there was a lot of relief effort, right? But you had to go through many different channels to get that relief, right? And maybe your business got it, maybe it didn't. And if it got it in a timely manner, well, maybe you survived. But if it didn't, then maybe you had to close up, right? But if you had your money diversified in maybe some other different areas, maybe all you had to do was just go and pull from that area to keep yourself afloat. But if you have all your money tied up in your your business, that barbershop, you go, if you're the owner, and you couldn't open for months, and you're calling, and depending on your personal situation, if you're not set up properly, or you were a freelance person that worked in that barbershop, let's say you paid your weekly rent or whatever the case, maybe you didn't have yourself set up properly, you could be in a very tight situation. But if you have a pile of resources over here, through the market, you could now pull from that money to keep yourself sustainable during this period that you were dealing with what you're dealing with. So what better way to make your money work for you than have your money invested either in the market, or some other entity.
One thing I can really appreciate about what you're saying is the idea of consistency and longevity. Because, like I said earlier, a lot of us jump into this stock market thing because it's a buzzword, because we figure we can make money super quick and there's no real effort involved. And from what I'm hearing, that's not the case. So,
No,
um,
definitely not. I'm definitely not. I mean, there's people who look at the stock market as a casino,
mhm.
like you just kind of describing, get rich overnight. And I'm not saying that people haven't never done that, but a lot of times people that have done well, if you look consistently, the people that have actually made most of the money in the market, they don't make their money like that. It's not a coincidence that somebody like a Warren Buffett and his partner are one of the wealthiest people in the world, and they made their money in the market. These are long-term investors. They may do some other different things to make money in the market, but you know they're long-term investors, and you know, you're taking on a lot of high risk if you're doing certain things like, trying to, get rich overnight.
Mhm.
And in most cases, it doesn't happen. And it's just like if you were to equate this to opening a business. If you open up a business, is the business gonna make all this money in a few weeks? Probably um, it's highly unlikely, unless you have certain things set up a certain way prior to the business launching, meaning that people know that the business is launching. There's some big marketing campaign that went out weeks ahead of time that the business is launching. You're aligning yourself with certain individuals that have a lot of influence to make people want to buy your product. For example, maybe a celebrity, or maybe you're launching your business with a partnership with a major retailer.
Mhm.
You went to them, you did a presentation, they love your product, and they're introducing your product into maybe 100 stores when it first comes out, which gives you like extreme credibility in the
Right.
marketplace. Unless you have something very very unique set up, maybe you could get that return on your capital very very quickly. But if you don't have those type of things set up, and you have to kind of go and do it like the grassroots way, and maybe kind of build yourself up. It's going to take a little time. It's going to take a little time for you to get get what you want, to build that credibility, to build that the testimonials of people using your product or service and recommending others. So it's no different, but you know like I said, it all depends on what you're trying to achieve and how you want to achieve it.
That makes sense. Going back to what you were saying about $5 a day, which sounds
Right.
feasible. I mean, that's your cup of coffee or a pack of cigarettes or any number of
Right.
our little, conveniences. Is that sounds good, but is that really enough of an investment to actually see any sort of return? Or is that like the bare minimum you would suggest to even want to play around with?
Well, I mean, if you definitely could see a return with $150 a month over a period of time, definitely. And if you couldn't afford $5 a day, especially living here in the United States, that means that you are in a very bad financial situation. Yeah, and I'm saying that in the most nice way. Yeah, because like you just said, that's a cup of coffee. That's this, that's that. That means and I you see, when you say $150 a month, that's like, wow, that's a lot of money. But when you say $5 a day, oh, I could do $5 a day because a lot of times you're not even watching how you spending your money.
That's true.
You're not even watching how you spending your money. So if you even somebody at the very lowest level of society, you know, probably could find $5. They probably could find it if they really wanted to. I mean, unless, like I said, they're total destitute. They don't have no income, zero income. But if somebody has something, they probably, unless they have some major expenditures, you know, additional children with no support and stuff like that, then I could understand maybe that may be. But if it's just you, if you're just talking about yourself as a single individual,
Mm-hmm.
even if you were not in a very good financial situation, I think you probably could find $5 if you have some type of income coming somewhere, and you could make it work for you. Like I said, the S&P 500 returns that excuse me, anywhere between 8 to 10% over the last 90 years. So you can build some wealth for you. I mean, from some statistics that I've read, the average American that barely has $1,000 to come up with in an emergency. You know, so if you could position yourself in the next couple years to have a few $1,000 sitting around in an account for yourself, you're doing extremely well compared to that person. You got 30,000, 40,000 sitting in an account based on you just growing small sums of money, and you have that there liquid. Now you have some money to maybe invest in the market in another different way, right? Because you built up your capital base, and that's the thing. You want to build up your capital base. But I could even show somebody how to, if they have a little bit more money, where they could invest in individual stocks with very small sums of money, because every individual stock that's out here is not really expensive in terms of if you relate them to other companies.
Yeah.
Yeah, other companies, and if you do it over a period of time, you can build up.
Hmm. Okay. We're winding up. A quick
Yeah,
question. The little things I play around, like I said, I dabble. I haven't taken it
right.
as seriously as possible. Win a little, lose a little. I'm kind of a set it and forget it type of person. So
Okay.
throw something in there and let it do what it does. Um,
Right.
I tend to invest in either things that I know are people's vices,
Oh, okay.
especially in times of stress,
Okay.
because
Yes.
you're always
Yes.
going to find a way to pay for your vice to get through it.
Right.
Or things that I like common products, things that everybody uses.
Right.
So I lost my question in the midst. I do
Oh,
that
I'm
at least once a
sorry.
conversation. I do that at least once. I'm like, I'm going, and it slows down, and I forgot what I was talking about. But are those, I guess, when you talk about different sectors and things like that, is that a way to think about investing, or should it be more, I guess the way I think about it is me for an everyday sort of thing. I don't have a lot of
Right.
education with regard to stock. I'm just like, okay, if I know this is happening, then I'm going to put money where I think people are going to need this.
Right.
Is that a common, like a base level mindset, or should we be thinking bigger than that or more specific than that when we're first approaching getting into the stock market?
Well, if you're referring to like individual stocks, right? When you make this statement,
Sure.
or you referring to ETF? Okay, well, even if you're referring to individual stocks, or you're referring to like, let's say, an ETF, like I mentioned, that may
Mm-hmm.
track a particular industry, that is actually a good way to think about it, because the way how I teach in my academy is almost like life principles, right?
Mm-hmm.
You know, we all should have principles on how we live our life, right? It's
Mm-hmm.
like, for example, I'll give you an example with me. I never exercise beef on an empty stomach. I will not do it. You know, I need to have nourishment in my body. So I make sure before I do any kind of exercise, I've eaten what I know I want to eat. I've drunk what I need to drink, and my body is ready to do that physical activity. You know, whereas somebody else, you know, maybe one minute they eat, next minute they didn't eat, and then they feel that their body doesn't give them the performance that they're looking for. I don't do that. So it's the same thing with stock market investing. Um, I have principles that I utilize. So I don't believe in investing in something that you don't understand. You know, you have to have knowledge of what you're investing in.
Mm-hmm.
And one of the best ways to have knowledge of the things that you invest in is things that you use on a day-to-day basis, right?
Mm-hmm.
Because you know why you like those products or services. You know why you think they're better than their competitors. You have experience. And even if there is a company in per se, in particular that you want to invest in, and maybe you don't use it on a day-to-day basis, that's perfectly fine. Go educate yourself about that company. Go read up about that company. Go look at its competitors. Get the knowledge about that company. So that kind of relates to you saying things that people that use on a day-to-day basis. That's basically you using your sense of sight, right? To
Mm-hmm.
see what's going on, and you know, in terms of people wanting to consume a product or service. Now, take the product or service that you use on a day-to-day basis. How many other people are using on a day-to-day basis? You get what I mean? That relates to
Mm-hmm.
what you just said to me.
Mm-hmm.
Right? Because if you're the only one using it, then well, there's no business, right? But if there's tens and tens of hundreds and thousands of people using it, well, then we know that, you know, it has demand. It has a following, right?
Mm-hmm.
So um, investing in a company like that, would that be more like speculation? No, because the business already exists. The business has been around a number of years. The business has a customer base domestically here in the United States, internationally around the world. So how risky could that kind of investment be? And but then there's other things you have to do to verify that. But I'm just saying that to you to say, you know, that's a very methodical, systematic way of investing. And that's basic common sense, what we're talking about right now. We're not talking about anything sophisticated, right? We're just talking about you're looking at stuff you use on a daily basis. You're looking around. Oh, my mother uses this. My father uses this. My cousin uses this. My friends uses this. Oh, all these people use this. Everyone in my college uses this. Everybody in my job uses this. Okay, you know, millions of people using this. Let me go look a little deeper now.
Mm-hmm.
Let's find out why they're using it, and then we can go there. Let's say, why do they like it over their competitors? That's basic common sense. You see what I mean? That's how I
Mm-hmm.
teach in my academy. This is I take this complex information like, oh, how do I invest? I don't know how to invest. You already know how to invest. The only thing is that it just hasn't been brought out of you. You follow me? Yeah, you already know how to invest already. It just hasn't been brought out of you. It's just like, you know, choosing if you have a good, let's say, mate, significant other that gives you everything that you need, and vice versa. That means you have the ability to identify a worthy person, or you did, which is why you have that, right?
Mm-hmm.
Right. And but those that haven't connected with that type of individual, they haven't developed the ability to analyze the next person properly to decide, I want this person to be my boyfriend. I want this person to be my girlfriend. I want this person to be my husband. I want this person to be my wife, and vice versa. You get what I mean?
Mhm.
Those that are able to analyze people like that and then come to a meeting of the minds, those are people that are able to find that connection. Those that haven't been able to determine that, then they're having difficulties, right? Because if you have that ability, when somebody comes in front of you in your vicinity that doesn't meet the requirements of what you want, you're not going to have no relationship with that person. It's not even going anywhere. It's going to end very quickly because you could see you able to. Same thing with investing in a company. When you understand how to invest in a company, the way that is based on common sense that you already have, then you be like, oh, okay. So then when you invest in that company and somebody says to you, why did you invest your money in that company? You could logically write out on a piece of paper, like you're writing a term paper, like when you were in school, you can write a
Mhm.
list of things. This is why I invested in this company. And you have a logical way to defend your argument. Just like if you were a lawyer in the court and you're trying to defend, your client, so that you can get them off, you can defend why you invested in that company and you can stand strong in your position. And somebody may try to find holes in why you invest, but there's no holes because you've done all of the research. You've done all of the research. So when things happen with that company and that may be negative, it doesn't mean anything to you because you just know that that's a temporary thing. It has that's a temporary thing. So it's like I said, it's really about the education, and we're here to provide that to the public, our community and other communities, and help people to really build, because this information that we're teaching here at the Mr. X Stock Market Academy, this is life changing information. I mean, think about all of the companies right now that are trading for, let's say, I don't know, $300 a share, $400 a share, $500 a share, $600 a share, $700, $1,500, $2,500, maybe $3,100. All of those companies at some point in time were probably trading for $50. Imagine if you were able to identify those companies when they were trading at $50, $30, $40, $60. And now these companies are worth, $700, $800, $900, $1,000. 100 shares would be 100 grand for you. Look at that. Potentially maybe you could have put in 20,000, and in a few years that 100 shares you bought now is worth $1,000 a share, but you weren't able to recognize those companies.
Right.
You get what I mean? So this is what we're trying to teach you here, and this is life changing because, the knowledge is worth more money than the money. And that's one of the things I tell my students. The lot is worth more than the money because we've all learned this from our parents. So the knowledge cannot be taken from you. It cannot be taken from you. The knowledge is worth more than the money, and that's why you see these stories. People win millions of dollars and they lose money because they lack financial knowledge, financial education, on how to manage money, how to control money. There's a lot of things to consider. So the knowledge is worth more than the money. And this is why when you asked me that first question about that starting point, I said, someone could easily go and, open up the brokerage to kind of do this. And then I said, but the other side would be more of the education. The education is worth more, than the money. And for the fact that I'm saying right now that companies that are, trading for $700 a share, $800 a share, $1,000 a share, $1,500, $2,000, $2,500. The statement that I'm making right now, that should motivate people to say, "Wow, I wish I would have been able to recognize those companies, and maybe I would be in a better position." But that's okay, nothing to worry. You can learn now, though. You get what because a few years from now, you could be in that position where you would now have built up that capital, but it starts now. You got to plant the seed now,
Right.
to see your harvest, you got to put it down now, and continue just to, work your plan, it's unbelievable. you know, it's unbelievable. All these companies around us, all this opportunity around us, and we just don't recognize, what's going. And mind you, life is not all about money. You know,
Mm-hmm.
I don't want that to be something that people take away from the conversation. It's about what you can do with the money. What is the purpose of the money? The purpose of the money is to maybe provide financial freedom for you, maybe to make life better for you, your loved ones, or any cause that you want to, support. Take maybe stress away from you that you may have, maybe because, I don't know, maybe you're working somewhere you don't want to work, but you feel trapped. But if you had the financial resources, maybe you walk away. So the money is giving you options. It's giving you options, saying, I don't want option A, I want option B. But the lack of resources is limiting you to be able to make those those type of decisions, for yourself. So, as I said before, this is a capitalist society, and we have to learn how money works, because if you don't learn how money works, then it's going to be working against you. It's going to be working against you in a way that you're not even aware of it. So yeah. So we have to learn, and I'm here, teaching people how to do that, through the academy. I definitely encourage your audience to check out the free webinar we're having this Thursday, once again, October 7th, 8:30 p.m. Eastern Standard Time, at mrxstockmarketacademy.com. Just need a free Zoom account, and I guarantee you will learn something from me during that webinar. It just runs about an hour, and we're here to empower students. And for our paid webinars, everything is all affordable. It's a one-time fee. We have a nice sale going on right now if you go to the website. So we're here to help. And just to let you guys know, I am not, as a disclaimer, I'm not a financial advisor. Okay, so everything that I say here is for educational purposes only. You have to do your own research on any investment that you choose. But we're here just educating people, because I'm a real life investor. I'm a real life individual that have helped a number of people launch businesses and grow businesses. So I've been around business majority of my life, whether it was a brick and mortar neighborhood business working with, or me just looking at a publicly traded company. So I bring that, to my academy when I'm teaching, in addition to things that I've learned on a theoretical level, from the degrees that I have in marketing and entrepreneurship. And I just put it all together, and just trying to empower people to learn how to do this, because I'm really a long-term investor. But the nice thing about being a long-term investor is long-term doesn't really mean long, meaning 30 years per se. There's ways on how to grow your money much faster in a shorter period of time, and there's a lot of things to consider, when in investing. So, like I said, I give it to you all. I'm not giving you pieces. I'm not giving you, which is why I mentioned before. I talk about the advantages and the disadvantages of many different investment products that people utilize, and a lot of times people not even give you that information. They're just saying, oh, do this and do this and do this and do that. But they're not talking to you about, well, this can happen here and this could happen here. You got to think about this. You got to think about that. So there's a lot of things to consider, right? you know, if I'm if I'm maybe 3 years away from retirement and I have a lot of my money, let's say, tied up in the market, and you have a lot of volatility going on right now, what should I do? Right?
Mm-hmm.
If I am much younger than 6 years old and I don't plan to retire anytime soon, and there's a lot of volatility in the market, how should I approach the market? Two different perspectives, two
Right.
different age categories, so we teach you how to think about, your investments, what you're doing, what you're trying to achieve, and the pros and the cons of, you know, that type of investment based on where you are in your life and what you're trying to achieve.
That makes lovely sense. But I mean, it seems like a simple response, but that's a lot of things that people don't think about. They're just like, "Well, I want to make some money." Okay, like
Yeah,
you need a little bit more information than that. It takes a little bit more of a thought process. So,
right. What's the best time to get out of an investment, right?
mhm.
I could answer that question different ways. You know, did you achieve the objective that you're trying to achieve? Did something fundamentally change within the companies that you're investing in? So there's a lot of things to think about in terms of, the answer to that question. It's not just like a simple answer. Oh, get out when the price is this.
Mm,
Are you an investor? Are you a trader? What are you doing?
right.
Who are you? That's what I'm saying. Who are you? Do you understand the tax implications when you buy and you sell a stock over a period of time, whether you held that stock for, let's say, 3 months or longer? Do you understand the tax implications? These are all things you have to take in consideration. We teach you that in the academy, right? Because you don't want to be out here doing certain things and all of a sudden, at the end of the year, when you file your taxes, you realize that you have this big tax bill that you didn't even anticipate, right? Because you're doing certain things with, because they claim they're saying, no, that's income that you earn, right? And you're moving money back and forth, right? So, you know, are you taking that into consideration? So there's a lot of things to consider, when you're, um, if you're a trader, if you're an investor, there's a lot of different things we speak about that we teach. So, like I said, we are a stock market educational company, and we're here to educate the public on how to properly invest in the stock market. Whether you want to invest in individual stocks, whether you want to invest in mutual funds, index funds, target date funds, IRAs, Roth IRAs, whatever you want to invest in, we're going to cover that in one of our paid webinars and teach you about that, so that when you will be educated. And this is once again, as I said, this is life-changing information. Like I said, we give you the lifetime email support, which is tremendous because you know um, most of the time when you were in school, you graduated, you can't go back to that school, 10 years, 15
Mhm.
years later and still have conversations with, you know, the faculty in terms of, what you had learned. You paid, you got your education, and that's it. Maybe you could deal with the alumni relations, or the career services, if you need assistance getting a job again. But other than that, you're not really interacting with your professors like that unless you kind of built that kind of relationship with them, where you were actually on a friend level, then maybe. But that's probably, most people, I can't really say, are friends with their professors. That they graduated from college. I highly doubt that. That you're calling up your professor and saying, "Hey, I'm, you remember me from marketing, you know,
Right. In a class of
201.
200 kids and
Yeah, yeah, like, and you like, I'm having this challenge at my job right now. What do you think I should do here? Working for this company, that kind of relationship typically doesn't. So we give you that, because we want you to succeed. We want you to get this knowledge and empower yourself, and let us know that you've achieved what you wanted to achieve, and you are now able to want to teach this information to your loved ones.
right. I appreciate that. Like I said, we've talked about this, how it all impacts the community, how it's so very necessary. But I only keep people, or at least I try to keep people hostage for an hour.
I know
Sometimes
we went a
people
little bit
don't
longer than
keep
that.
hostage, but no, it's necessary information, and the fact that you're so forthcoming with it, and like I was talking to you about the whole gatekeeper thing. Like, I think for most things, we're past the point of trying to hold back information from each other. So you being so forthcoming with it, and really wanting to help other people, it's a sign of better things to come, and it's
Yeah.
necessary. It's appreciated. So it
Yes. Yeah. Definitely. Yeah. It's it's about setting up the community, for success. That's really what it's
Mhm.
about. You
Mhm.
know, and then when you add on top of life experience that we all have,
Mhm.
um, we can set up, let's say, our our children and our grandchildren be to start off their adult life in a totally different way, right? I mean, and this is the empowering thing about becoming financially literate, and understanding how to make your money work for you. I
Mhm.
mean, could you imagine, if you could buy your first home or condo, without having a mortgage?
Yeah.
You know what I
Yeah.
mean? And all you have to do is just pay taxes and the general maintenance. You don't have no mortgage. Could you imagine? Even though look, people go to college, and they have athletic scholarship, athletic scholarship, academic scholarship, but not everybody gets that, right?
Right.
And because if they did, you wouldn't have the student loan debt that you have here in America, which is in the trillions of dollars, right? And in most cases, the reason why that happened is because of lack of resources, right? Because if you
Mhm.
had the money, you wouldn't need to go into no debt, right? But then also financial, education as well.
Yeah.
Right. Financial education as well,
Mhm.
and sometimes we learn this the hard way, but it is what it is, right?
Oh
Because
yeah. Get that
you know,
refund check and go
right,
go nuts.
right. Not only that, you know, when it's time for you to buy a home or start a business, right? The criteria that the bank or the lending institution puts you through in order to see if you qualify is very, very stringent. You have to prove that you can pay that money back, right? But when it's time to apply for a student loan, they don't ask you for none of that. You have no income, but though they're willing to lend you thousands of dollars to go to school, and you have no job, you have no assets, you have no money. If you try to get that same loan to start a business, the bank would say, turn around and walk out. They're not giving you that money. They're asking you for your um, they're asking you for your tax
License.
returns.
Ask me
They're
for your
asking you for your
license.
credit score, everything, right? They're not giving you that loan.
Mhm.
So, but in one case, you can get thousands of dollars to go to school with no credit, no assets, no nothing, right? But on the other hand, you can't get a home like that. You can't start a business like that. So why is that the case, right?
That's true.
Now that's a little bit off topic, than investing in the stock market. But if you had the financial education, then you say, you know what? I don't think I'm going to take out that kind of debt. because I don't, maybe the risk of having that kind of debt in terms of me having the ability to pay it back is too risky for me. So I'm not
Mm-hmm.
going to do it. I'm going to have to just go to that other school, and try to make that work for me. I don't need to go to that, prestigious school as people keep telling me I need to go to that will give me these opportunities when it's undefined. It's not a surety, right? It's not a surety.
Right.
You're not sure. So let me not go down that path, So, um, this is why, the financial education is so is so critical. And once again, like I said, once you learn how to make money, okay, on your own, and let's relate it into the stock market, the feeling that you have in terms of the empowerment is unbelievable. It's unbelievable
Right.
because
Yeah.
now it's like you don't have to wait for anybody to try to tell you how you're going to get money, how you're going to earn money, or you got to wait to the next quarter before you can get that raise, or whatever. No, you know how to make your money work for you and make it multiply, for you. So, it's like I can do for myself. I can cook my own food. I can fish for myself. I don't need you to tell me to bring fish to me. I don't teach me bring, the the takeout to me. No, I can make my own food. I can build my own house. I can do this. I can do that. So you can't stop me if this is what I want to do. And it's a very empowering um, feeling. And when you see that you're able to actually do this on your own and like, wow, look at this, then okay, I can teach it to my daughter, I can teach it to my son, I can do this, I can do that, so it's an empowering situation. Like, and that's why I said, could you imagine if, you know, you able to get your first piece of property and you don't have a mortgage on it? It's unheard of, right? But reason most people had to do it because you don't have those type of resources.
Right.
Create your own resource here. You know what I mean? This is why, being able to have an abundance of wealth, it's not going to hurt you. It's only going to help you. It's not going to hurt you. It's going to help you. So, and it's going to help those around you. So, you know, um, learn how to fish, learn how to cook, learn how to invest. We're here to teach you, in an honest, pure way. And, we're here to empower you, empower your children. And that's why, I had mentioned that post about, because I had actually posted that on my Facebook and my Instagram account, saying that, we send our kids to, all these different types of activities, the basketball camp, football, baseball, swimming, music, and those things are really great. But why not send them to a financial camp, a stock market camp, to learn how to make money? Because at some point in their life, they're going to have to learn how to make money. And on top of that, most children are not going to be able to earn a living with the extracurricular activities that they are involved in, because the odds of playing a professional sport is extremely low. So why would you dedicate yourself to an activity that you can, more than likely, you're not going to be able to make any money off of? It doesn't make any sense. There's nothing wrong with doing it just to, like I said, to keep in shape and be active and learn other things, discipline, focus, and teamwork and things of that nature. But we all going to have to figure out how to make a living for ourselves. So learning how to make money ultimately is coming down to be like a survival skill, right? If you in the forest and you're able to identify, the things that you could eat and the things that you can't eat, then you're going to survive. If you know how to build certain things so you can handle weather conditions, then you're going to survive. If you know how to get away from certain animals that may be, dangerous, then you can survive. But if you don't know those things and you're in the forest, what's going to happen to you? You may not survive. Relate that to living in a capitalist society. If you don't understand how capitalism works, how money works, tell me how well will your survival be?
And I think that is That is the perfect button up because without even intending it, you basically spoke on the whole purpose of the People's Pride Project in and of itself. That's why this exists, so that people can come in and learn how to cook, how to fish, how to make the money, how to do these things, because that is the need to survive. And more than survive, that gives you the freedom to live the life that you want to live the way you want to live it.
Right.
And to me, that's more important than any of it. You can't tell me what to do. You can't tell me how to do it. You can't stop me from living the way that I choose to live or being who I am because you no longer hold the cards in your hand for my life.
Right.
So,
Right.
again, thank you very, very much for taking your time to sit down with me on our couch conversation. People can find you at your website. You said that's also where they would register for the free class on Thursday. And
Yes, yes, definitely. And it's
and
going to
any
be
of the
live.
Mhm.
Yes, it will be
And
live.
that's where they can also find all of the paid courses should they decide to actually enroll in the academy itself, right?
Yes, yes. This Sunday, um, October 11th, I actually have all three paid webinars going on. The How to Build Wealth in the Stock Market webinar is starting at 1 p.m. Stock Market Investing Fundamentals is starting at 3:30 p.m. Eastern Standard Time, and then How Wealthy People Build Wealth in the Stock Market. That webinar is going on from 6 p.m. to 8 p.m.
Okay.
Yeah.
So check those out.
Yes, yes, yes. Check them out. It's a one-time. Each of the paid webinars are $275. It's a one-time fee. But right now, we have a promotion where if you use the coupon code 100, you can get $100 off. So it'll be 175. Yeah, one-time fee. You'll get the lifetime email support, and then also you'll get a list of my stock picks.
Okay, well, there you have it. If you want to follow Mr. X on his Instagram page, you see that scrolling across the bottom. And
Right.
again, it's Mr. X Stock Market Academy. It's cohesion. They're all the same. Once you learn one, they're all the same.
Right, right, right.
So,
And then we're on Facebook as well. You can look us up, follow us as
okay.
well. Yes.
I believe that was also put in the chat.
Yes,
So,
yes.
again, thank you very much for your time. Thank you for educating us. Thank you for, just putting us up on game and
Okay.
creating a resource where we can go to further our self education.
Yes, yes. And thank you for, creating this platform and bringing such a diverse number of topics, to a variety of different communities and having me here today. You're
Well,
doing really good work.
thank you. So, it has been our Tuesday night, and thank you for joining us for our couch conversation.
Yes, everyone have a good night. I look forward to seeing you at the free webinar this Thursday, October 7th. Bye
All
now.
right. Bye.